Hello, stock traders. I hope all of you survived today. Boy, it is not fun when the market is red. So far, year to date, I am at 147.13%, but the only way that I got there was by having a strategy when the market turns against me. And it's so important to understand and to have a plan of what you are going to do when you come into these situations so that you don't panic. Don't panic sell. That's always the worst. It's the worst time typically to sell. You need to pay attention to market trends and you need to pay attention to them all the time, but have a plan and a strategy. So in today's video, what I'm going to do is I'm going to talk about just what I do. How do I approach a market pullback like this? And it has yielded me success, and hopefully it can help all of you too. And then I'm going to talk about where I think it's going and what I think in the short term where the market could be heading, so that you are prepared and at least have an idea and know the levels of where the market should bounce and where we should find some support. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you like the content of this channel, please subscribe and turn on those bell notifications so that you don't miss out on one of these videos. I have some links down below I need to let you know about. Of course, I have Webull down below. I use them each and every day. I find them very handy for options trading, and I also do some crypto trading with them also. I have a BlockFi account too. I have a link for that down below. I love to earn interest on my cryptocurrencies, and that compounding interest is really key. And we also have a link for our Patreon group if you are looking for a group of investors that have a lot of really great ideas, and if you are looking to get access to my buy and sell alerts on each and everything that's in all of my portfolios, then the way to do that is to be a member of the Patreon, and there is a level for you. And for the small amount it costs, it's well worth it. Okay. So I look at the Elliott wave. I do lots of planning with the Elliott wave. If you have no idea what I'm talking about as far as the Elliott wave goes, look up some videos on YouTube on what the Elliott wave is and educate yourself on how to use it. It will help you to understand the emotion behind the market when it's going up, how far it typically will go up, having a plan and rules associated with where the market is going. It helps me to plan and gives me a strategy each and every day. So it's very important to learn those waves. And also, when I come to an exit point on a stock, when the stock market is acting like this, for example, my insider swing play is my #1 strategy that I use each and every day. So when I come to the exit point on one of those stocks and the market is acting like this, I will hold as cash. I do not buy at resistance levels. You want to buy stock at support levels. You want to be out of the market and have cash on the sidelines when the market is pulling back like this. And then you want to get good at finding the bottom of the market, finding where support should be, and then buying at support. So many investors have no idea about support and resistance. It is very important to understand levels and when to not be buying in the stock market. And I think right now there was a lot of panic selling out there, and there's starting to be some blood in the streets, but it's not as bloody as it can get. My plan, I have money on the sidelines, and my plan is to wait for those support levels and hit those. And I'm going to talk about those here in just a little bit. All right, so let's get into what the SPY is doing and take a look and just give you my opinion. Now, I am not a financial advisor. Of course, you need to do your own due diligence. And here we go. Let's take a look. Okay, so as you can see here, I am charting the Elliott wave, and this is a 5-wave sequence. And in my opinion, we are on the SPY in wave 3 currently. We have wave 1 that's an upward move, and it's a bullish wave 5. It's a bullish 5-wave sequence. We have wave 1 that is bullish. We have wave 2 that is a pullback, and we have wave 3 that is almost at its end. And so we had that high that happened yesterday at 447.11, and we have had this pullback all the way back down to it got well below 442. I was telling a lot of my members in my group today that 442 was an important support level, and indeed that is exactly what happened. There was a lot of buying at 442. The level below this, though, to kind of keep in mind, and we could go quite a bit lower, because wave 4 typically comes down to the middle of wave 2. Now, it can't go below wave 2. Otherwise, it messes up the entire thing, and I don't think we'll get quite that bad. But I do expect this to pull all the way back to right around the 430, 435 area. And 435 is an important support level, and another support level is 432. So it will be really interesting to see how the SPY reacts when we hit those levels. Now, in the 5-wave sequence, wave 3 has to be the longest, and it did accomplish that. This is the longest wave so far, so nothing has been broken as far as the rules go. Another rule is that wave 4 cannot go below the bottom of wave 2, which was right here at 421, and it won't come down that far, in my opinion. I think that bulls will buy up the dip definitely in that area. I don't think that this is going to be a major correction. I think that will happen later in the year. At least that is what the numbers indicate, and that is my plan, at least for what I think is going to happen. Now you see these big yellow lines that are down here. These are gaps, and so these gaps typically fill. And so at some point, I do think the SPY is going to get down to 412 and 400 again. Believe it or not, we could see a massive pullback at some point, and these gaps could get filled. Now, it is possible they never fill, but most likely gaps do fill. Okay, so let's take a look at the Russell. The Russell 2000 is really struggling, and that is why so many people's stocks are in red. And so I've been trying to track this, and it has been a whipsaw. There isn't any clear direction or any clear trend to the Russell until really today. I think we are definitely seeing a bearish trend. And so that is something really kind of concerning. 211 is a critical support level that this will need to hold above. So right now, this dipped all the way down to 216. And man, these big old red dips down here, I mean, there's a lot of selling that happened today, but I think it could go further. So what could be happening is we could be starting a 5-wave bearish Elliott wave. So 5-wave to the downside. So this could be wave 1. This could have been wave 2, and it follows the rules of that. And we could be at the start of a wave 3, which would be the longest, and go all the way down. So some other important levels to consider are 205. And if we break 205, the Russell could come all the way down to 196. And so I think that right now is the time to just kind of sit on the sidelines and be watching those stocks that you would normally pick up with your different strategies. But wait for those levels. I would say wait for 211 at least and see how it acts once it hits 211. If we bounce off of 211, it might be a good time to scoop up a lot of those deals that are out there. That would be blood in the streets, and I think that would be an important support level to buy at. After that, 205, if it breaks down below that and it doesn't really hold 211 and it goes all the way down to 205, 205 would be that next level to be buying at. And then below that would be 196, which would really be surprising, but could happen. And so that's something kind of keep in mind. You need to have a plan. And so I have a lot of different strategies that I'm using all the time. And even when the market's pulling down and I have a lot of cash on the sidelines, I am watching those strategies and I'm still tracking those stocks that I plan to enter, but I am waiting for that support level before I go in. Now, the Russell is, in my opinion, the most important for smaller stocks, definitely. So if you are looking at stocks that are below $20, you need to really be paying attention to the Russell. If you never buy those type of stocks and you tend to stick with those blue chip stocks and stocks over, I would say stocks over $30, then you need to be checking and watching for the SPY if your strategies tend to support that. So based on the strategy, you need to be watching the indice and paying attention to those support and resistance levels. And so one of the reasons why the SPY had that big pullback is because this was a very important resistance level. And so a lot of the market and a lot of those hedge fund buyers and different institutional owners recognized that we were at a very high point, all new market high, and we've reached quite a few on low volume. And today we got higher volume and selling. And so that is one thing to look for. Anyway, I hope this helped you in some way. Please reach out to me if you have any questions in the comment section down below. I will take a look, and I'm happy to answer any questions that you might have. Wishing you all the best in the stock market, trying to help you to be safe out there and to have a strategy. Have a strategy with each and every stock that you get. Anyway, let's have a great rest of the week, and Raythoven out.